Well, I think it's fair to say that we now know that the very deep and sudden crisis that we had in 2020, thanks to the vaccines, is really a V-shaped downturn. So the recovery is fast. Quite a few countries, including mine, have reached pre-crisis level of GDP. The majority will have that at the end of the year, some only beginning of next year. So it's a rather fast recovery compared to 2008, 2009. But what we need to look at now is the quality of the recovery. So can we really build forward better, not do the same mistakes as other times? One thing Europe has recognized, and we all share that, is that we must focus on qualitative investments for the dual transition.
That brings me to the next point, the next generation EU bonds. You tapped the market for the first time this week, so very successfully. But when we talk about the deployment of the funds, how do you want to assure that those projects are really contributing to sustainable growth?
Yes, this is a key point. I mean, there has been some criticism that we were rolling out the program too slowly in Europe, but in fact it's because the European Commission and we all want as member states that the money is used for the right purpose, not only because of control reasons, but just because the money should be channeled to climate change oriented projects or to the digitalization of the economy. And in that sense, I think it's a big difference with 2008, 2009, where the accent was on budgetary discipline from the beginning, as soon as the worst part of the crisis was over. So we have learned that lesson. And again, we have an investment gap in Europe that we really must make sure we can reduce, and therefore it's important to have the right focus and the right monitoring.
So just in practical terms, so that the countries are preparing probably investment plans and you are going to approve it, right? So how long will that last, and how long will it take to get those funds really to the economies?
So in fact, as we speak this morning, 5 countries have had a positive opinion by the Commission, including mine. The President of the Commission, Ursula von der Leyen, will be visiting Luxembourg this morning. I will see her. And a dozen countries will have finished their program and have received a green light from the Commission by next week. And if that's confirmed in the next couple of weeks, so from July on, money will flow. So for part of it, because these plans are sometimes extended or have a duration of 5 to 10 years depending on the projects, and the money will flow depending on the implementation of the project. So I think it's a more medium long-term plan compared to what is done in the United States, which was more help for people, immediate help for their purchasing power and their livelihood. The Next Generation EU is a focus on the productivity of the economy and on the dual transition.
Let me ask you about the markets, because you're also issuing, or are going to issue, a lot of bonds into a market where interest rates are bound to rise. So is that a concern or a consideration also?
We have to make a distinction on the markets between Europe and the United States at this juncture. Inflation expectations in Europe are far lower than in the United States, so borrowing costs are still quite low. The EU Commission now lent, for the first time, 20 billion on behalf of the European Union and listed this bond at the Luxembourg Stock Exchange, and the rate was very good on the one hand, but the other thing that we have to keep in mind, this is the first time in history that the European Commission lends on behalf of the member state. So some have called this a Hamiltonian moment. Well, this Hamiltonian moment has happened this week, so the whole plan is being rolled out.